Intraday trading, high frequency trading, in and out of the trade, 1, 2, 3 minutes. Swing trading, we're moving slow. We're getting out of the trade 1 to 2 weeks. Well, honestly, I consider myself doing both. See, when we're talking about intraday swing trading, it sounds like a contradiction. You have the tortoise and you got the rabbit. One's moving slow and one's moving fast, but really what you're doing is you're maximizing on your profit potential. So for example, if you trade your 9 to 5, you may have been trading economic news like I have, unemployment. One of the things that I've seen with unemployment is that especially in 2018, we broke some all-time record lows. And so I probably thought I was gonna stay in the trade for maybe 1 to 2 hours, but instead I ended up staying in for 1, 2, 3 days, maybe even a week. But that's okay, because with options, we just have to pay attention to our time decay and our expiration date. And that's what I'm gonna be breaking down in this video. Okay, so the first thing you gotta understand is the difference between intraday trading, swing trading, and day trading. And the basis of it is the difference in the time frame. So I have the euro up behind me, and it's because I'm gonna use it as an example. But first, let's run real quick through those definitions. So the first one is intraday trading. Now, intraday trading is basically you manage open positions in terms of seconds, minutes, and hours with the objective of capitalizing on rapid fluctuations in price. So when we talk about high frequency trading, when we talk about scalping, that's when we're talking about intraday trading. So when you're intraday trading, you're not staying in the trade for more than an hour. Really, what you're trying to do is a quick scalp because you're trying to get that high fluctuation in price. So when you have volatile stocks or underlyings, that's when you typically do intraday trading. Now, day trading is basically opening a position in a given market only to make an exit by the closing bell. So if you're trading stocks, that's about 4 p.m. and if you're trading futures, that's around 5 p.m. The next one is swing trading. So swing trading is basically opening a position and holding it for a session or maybe even more. So it could last from 2 to 6 days. It could even go up into the weeks. So when we talk about swing trading, this is when we talk about fundamentals. So a lot of times when you're trading economic news, that's when you step over into swing trading because you use technical tools and indicators to refine your entry point. Then you also may use geopolitical news as well as other key roles in your trade selection and as well as with your management. So when we talk about intraday trading and swing trading, I'm sure at this point you're like, wait, so how are you going to combine something that's high frequency and something that holds a trade for 2 to 3 weeks? Is enter today and exit is pending. Now, this is usually based on economic news. So for example, I talked about the fact that I like to trade unemployment. Unemployment is one of those high impact economic news alerts that comes out. We can expect it consistently month after month after month. We see a lot of volatility in the underlying, but not only that, but we also tend to see a trend for maybe 2 to 3 days. So that's the reason why I like to use this intraday swing trading technique, because what I may do is I may get into the euro when they get their consumer price index, and I may get in on Monday. But here's the thing, if they got amazing news, I may want to stay in that trade longer than just Monday. I may stay in for 2-3 days up until the next news announcement. So let me give you an example using Forex Factory. The euro, for example, because they had a whole lot of news on Friday, and boy, did we see some movement. You see it right behind me. So this is a euro and this is Friday, and I'm going to show you at 4:15 they had the French flash services PMI. And so basically what that is that's the purchasing managers index, and that's really important because that talks about the business activity in that particular country. And so not only did France have it, but also Germany had it as well. And they both had it at 4:15. And as you can see, they got way less than forecasted, 48.7, when it was forecasted to be 50.6. So that was really huge. And because of that, we saw this in the market. We saw a massive move to the downside on Friday alone. So remember, what did we say? If you know economic news is coming up, which you should be checking your charts the day before and the week before, you would have been able to catch this, because seeing that we saw that it says high impact, and if we know anything about trading, if we've been following these economic news alerts for a while, we know that PMI typically moves the market. And so using our fundamental analysis in this case, we could have got this trade and we would have caught some of that downside movement on Friday. Now, remember what we're talking about: intraday trading, day trading versus swing trading. So typically if you were a day trader, you would have got out of that trade by closing bell. So you would have got out on Friday. But what if you had allowed yourself to stay in that trade for longer? Well, take a look. We're still seeing a move to the downside. And even going into Tuesday, we're still seeing that massive move to the downside due to that announcement that happened on Friday. So what we're trying to say is don't be afraid to stay in the trade, especially when we're talking about especially when we're talking about fundamental news, because a lot of times, depending on the fundamental news that's coming out, we know that it's going to move the market, and we know it's not going to last just for one day, but we're probably going to see that trend for 2, 3, 4 days. It all just depends on your technicals and what kind of announcement is coming out, because the CPI may move the market a lot more than, let's say, the retail sales. It's just because this has a high impact and this is a medium impact. So it's really important to note what economic news you're trading behind.